Hello and welcome to this video. In this video we're going to talk about some changes that have happened recently to national insurance and also dividend taxes which could well affect your business. Stay tuned. Hello, my name is Aaron Patrick. I'm a chartered accountant, a certified UK trainer, fancy new logo, that QuickBooks Chap on the internet, and also head of accounts here at Boffix. And what we're going to talk about today is unfortunately some tax increases that everyone needs to be aware of. Now they come into effect April 2022, and the idea is that there are various elements that are going to increase taxes that if you're in business, you're going to have to pay. And also if you're not in business, you're still going to get affected as well. So first of all, let's talk about the news and what actually happened, and then we can talk about how that's going to affect you and if there's anything you can do to help mitigate the tax rise. First of all, the news is that April 2022, Boris Johnson has just announced that the national insurance costs are going to go up by 1.25%. Now, what that means is that both if you're employed or self-employed or even a director, you're going to get hit by these changes. So what's changed? Well, if you're employed, it's really straightforward. Basically, your pay slips after April 2022 will show an additional national insurance charge on there. Basically, if you're already paying national insurance as of now and coming over to the April 2022 regime, you'll find that you'll then be paying an additional amount of national insurance contributions at that point. So at the moment, you should be paying around about 12%. You'll see that increase to 13.25%. And as a worked example, if your income was around £24,000, you would expect to see an additional £180 of contributions throughout the year. If you're self-employed, then again, this will affect you. So if you have to complete a tax return each and every year to show your self-employed income, then going forward, you're going to have to account for that 1.25% from April 2022. So in a nutshell, if you're already paying national insurance and contribution on your self-employed income, then you're going to expect to see that increase based on the fact that you'll be then paying the additional 1.25%. And the numbers basically mean that it will go from 9%, which was your basic band, all the way up to 10.25%. Now, for both of those scenarios, there's also the high rate band, which is at 2%. That as well is going to be increased by the 1.25%. So there's no hiding away from this increase. The final tax change to make you aware of, though, is dividends. Now, dividend taxes are very, very popular, especially if you have a limited company. If you think back to one of our previous videos, that's how we say it's an effective way of getting your income out of a business. Well, dividends was historically charged at 7.5%, then 32.5%. But dividends has also had that increase of the 1.25%. And what that basically means is that you're going to be paying 8.25% and 33.75% going forward. Now, the good news from a dividend point of view is that dividend tax-free allowance of £2,000 still going to maintain. It's a shame that's not been increased, but at least it's not reduced. If you think back a couple of years ago, that was 5,000 reduced to 2,000. So the good news is the fact that it's not been reduced any further. For you guys with a limited company, your director's salary probably won't have any national insurance, so you'll probably be okay on that, but do talk to your business advisor or us here at Boffix. But your dividends is where you're going to see that increase of taxes, which means from a cash flow point of view, that's going to affect you when you come to do your personal tax. So that's where you're going to see your increase. Your personal taxation is now going to be increased because the dividends themselves are going to have a higher rate of taxes applied to them. So what top tips have we got to prevent these tax charges? Well, unfortunately, the only option that you have to actually play around with these numbers and actually try and make these numbers work in your favour is going to be if you're a limited company, and that dividend taxes is the one that's going to affect you. You see, with dividend taxes, you get to most of the time get to dictate when those dividends are taken. So it does make sense that if you can, is to bring forward dividends from maybe the year you were going to pay it, so April 2022, and maybe bring it forward to this particular tax year. Before you go running ahead and doing that though, remember the normal processes when it comes to dividends and trying to keep dividends as tax effective as possible. You need to see how much dividends you've had in that current year. You want to try and prevent as much as possible out of that higher rate, so that 32.5, and you want to be able to try and maximize that basic rate if you possibly can. The other option, as always when it comes to dividends, is to try and find additional shareholders that you could utilise, because each and every shareholder brings a £2,000 tax-free allowance, and they may have basic rate for you to be able to utilise as well. Overall, dividends and everything else can get very complicated, so please do reach out to either ourselves or your own accountant to be able to understand this in a little bit more detail. But the TDLR is there are increases to taxes for pretty much everybody by 1.25%. And all you need to do is know that that's coming in from April 2022. So what are your opinions on this tax increase? The good news is that this money is going to be ring-fenced for NHS and other social care matters. So that could be a good thing, the fact that we're going to be ploughing that money that we've just been taxed extra back into the services that need it the most. National insurance has been always one of those taxes that's most difficult for us as accountants and business advisors to be able to help you effectively manage your national insurance contributions. Because at the end of the day, national insurance is one of those taxes that most of the time relates to if you've earned the money, you're going to have to pay those taxes on it. But from a dividend standpoint, remember you do have that flexibility. So maybe now moving from a sole trader to a limited company might be a little bit more beneficial to you, just to prevent yourself from going over to that national insurance hike. So let us know in the comments below, is there anything else you think we can do to help minimise that effect on those national insurance contributions to you and your business? As always, my name has been Aaron Patrick. It's been an absolute pleasure to do this video for you. Bit of an update for you, but one that's going to be very important to you and your business. If you need more tips, tricks and everything else in between when it comes to the world of running your business, accountancy and everything else, then you're already in the right place. Keep subscribed to Boffix. My name's been Aaron. Again, it's been an absolute pleasure, and I will see you in the next video. Bye for now.